Well, we always expect something new in markets, and what we've seen overnight is absolutely unprecedented. You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, markets did not celebrate Diwali that well. I think we're going to have another Diwali, right? It's just crazy what we've seen overnight. Unprecedented moves, really. I think there is no other way to put it. 7.5% move on the Nasdaq, the S&P 500 about 5.5 odd percent. I could detail for you this is the biggest since when, but then we'll have to go a long time because these are unprecedented. 6% fall in US yields across the board, across tenors, 2-year, 5-year, 10-year, 30-year. On the 10-year, that translates to a 28 basis point fall. The dollar index fell 2.5 odd percent. The rupee in offshore markets is indicating a big gap higher, and the SGX Nifty is indicating a 300-point higher start. I mean, I think we're going to push out of that congestion zone we've been talking about for the last 6 or 7 days. 18,413 on the SGX Nifty futures. It's going to be a good day in trade today. Sonia, hi. Nigel, hi.
It's going to be a good Friday, right?
Yeah.
I mean, after the match yesterday, I think this is the balm that
we needed this.
Yeah.
Right?
Yeah. We track only markets.
We don't watch the match anymore.
Selectively.
Okay, but I mean, great for the bulls today. It's going to be a big one, at least at the start. Now, here's the big headline, right? The US consumer prices, they rose by 0.4% in October. It was less than what the street was estimating. So that's where the big 1,200-point bump up came in from for the Dow, the S&P 500, the biggest one-day rally since 2009. Now, this smaller than expected rise in the consumer price index is it's giving hopes that perhaps inflation may be cooling. These are just hopes at the moment that if inflation cools off, it's still nowhere near the targeted 2% range by the Fed. But if inflation cools off, then perhaps the Fed may not need to be as aggressive in terms of rate hikes. The Treasury yields fell sharply, as Prashant was also pointing out. But for our own markets, there is a bit of a congestion zone around this 18,300 mark. So let's see if that gets conquered today. The FI flows have dried up a bit. So, that's something you also keep on your radar. But we get this data monthly from the mutual fund space. And what stood out for me over there is that SIP inflows have crossed 13,000 crores for the first time ever. So this equity cult, at least as far as retail investors are concerned, that continues. And I think that's a big positive over there. So, of course, a bumper opening is what we're looking at. But the global arena also looks quite stable.
I would say it looks very volatile in a positive way, Sonia, right? I mean, they say that the biggest rallies also happen in bear markets, but a near 8% rally. I mean, I've tracked markets since, 2003, 2004, and 7-8% kind of single-day moves on the back of data, it's rare. I mean, let me put it that way. And it's not just the equity rally. Let me just quickly emphasize, because the moves are so large, I think it bears repeating. The S&P 500 is up 5.5%. The Nasdaq is up 7.3%. As I said, Treasury yields fell 6%, right? These are, U.S. Treasury government bond yields I'm talking about. The 10-year lost 28 basis points. Market is priced the Fed's terminal rate. And this has been the problem. Where does the Fed rate peak out at? Is it 5%, 5.5%? It's fallen now to 4.9% after the consumer price inflation data. The dollar index fell 2.4%. It's at an important level, at the 20-week moving average on the dollar index. And I think if the dollar stays even here, that's great news. Look at the other currency moves. The Japanese yen, the British pound, 4%, 3%, 3.5% moves on some of these currencies. So this is very large volatility in a positive way. Now, what from here is the question, I think, which all of us will sort of wait and watch. So tonight we get the Michigan inflation expectations data. So you got one more inflation data you got to get by. But after today, all the way till the first week of December, there is not very much, right? Very limited info. So it's a bit of in that sense, a clean run. You'll hear from the Fed officials. By the way, overnight you heard from 5 Fed officials and all said that all basically repeated what we heard from the Fed chair that, there is no loosening as of now. We need CPI numbers. And by the way, all the speakers spoke after the inflation numbers. So there was no let off from the Fed speakers, but the market did what it did. dollar peaking process may play out from now all the way through 2023. I'd made this point on the last editors roundtable as well. The bulk of the rate hikes, both in US, in India as well, given where inflation is, perhaps is behind us. It's not ahead of us. So hopefully dollar peaking process will start. It's unlikely to be a straight line. It never is. It'll be a volatile process. I mean, it's foolhardy to expect that after 7% kind of days, the market goes into a very gentle kind of, phase and the market trends higher slowly. It's going to be volatile. You will get big days like what we saw overnight. But cooling US inflation is also positive news for India's macros, right? The simple interest rate differentials, and if interest rates don't move too much higher in the US, I mean, the pressure on India, Indian rates are about, 3% higher, that also cools off. It comes off. It helps the rupee. The offshore market is indicating a big gap. And I think the concerns about imported inflation, etc., also take a bit of a backseat. Eases the pressure of the RBI to try and defend the rupee. In terms of sectors, I think with the big 7% move in the Nasdaq, IT stocks perhaps have a bit of a tailwind. The dollar has fallen very hard. The fundamental picture for commodities, I would say, is not that great. But just because you've seen this outsized move in the dollar, metals perhaps are something you should watch out for. And as I said earlier, new highs are a matter of time for the Nifty, for the Bank Nifty. The Nifty, of course, at 18,604, which was the October 2021 highs. Maybe not today, but maybe next week. The Nifty Bank, we already made a new high. We cooled off a little bit, so watch out for that as well. Nigel.
Well, that 18,350, 18,400, I think for the last couple of weeks, we've been talking about that being a bit of a resistance. So with the kind of cues we have, the big question is, will that be, conquered finally? And the ingredients are in place because the Nifty is going to be starting above that 18,400 mark for the first time all the way since 20th of October. Pretty good news out there. The dollar index, that's cooled off, and that's a big tailwind for emerging markets like India as well. The FIs, yesterday they added some short positions and they unwound some long positions out there. And just take a look at the way the short positioning has moved up from around 41% at the start of the series. It's moved to around 47%. Those shorts that they added of 11,000 contracts, that's a blessing in disguise because the flows have dried up. The FI flows, well, they have tempered down quite a bit. And now the institutional flows number, that's the DI and the FI number put together, that was a net sell number yesterday, close to around 950 crores odd, which is a bit of a worry. But these shorts in the system will give that additional fillip that's required. On the option side, well, there was writing that was seen at around that 18,000 put and the 18,000 call as well. Now, the call writers, particularly the 18,000 call writers, the premium yesterday was 150 rupees. At the start of the day, it was 250 rupees. They're going to be forced to close out some positions. So keep an eye out on the 18,000 call. And we see some unwinding out there. That's telling you they're packing their bags and moving out. Levels to track, a close above 18,350. That's on the bulls' wish list for sure. Start is well in the green. We have a firm support in the near term at around 17,850 to around that 18,000 odd mark. SGX Nifty, Sonia, is flying away. 300, triple century to kickstart trade. The bull's wish has come through. Can we end around these levels? That's the big question.
Okay, if not now, then when, right? Yeah. I mean, it's the bull's time today. That's the only way to put it. And all-time highs in just a matter of days, perhaps, is what you're expecting on the Nifty. Could it be today? Only time will tell. But on the equities front, we have lots of commentary coming in. So let's get straight to that. First up, Chris Wood of Jefferies says that one change will be made this week in the Asia-Pacific ex-Japan relative return portfolio. He says the weight in China will be reduced by 1 percentage point, while the weight in India will be increased by 1 percentage point to maintain the overweight. So that's important. Jefferies there increasing their India weight.
Well, money market views from Bhaskar Panda of HDFC Bank, who says in the US, the CPI reading came out lower, prompting a huge correction in the dollar index, and US yield stocks have rallied, and the prevailing positive risk sentiment in Asia is expected to aid INR appreciation today. He expects another gap down in the dollar-INR pair, taking cues from overseas markets today. He expects that pair to trade in a range of between 80.5 and 81.8.
And on the bonds, Bhaskar Panda says the Indian bond yields will also get influenced by the sudden drop in US yields overnight. He expects the 10-year benchmark yield to trade in a range of 7.25 to 7.35% for the day.
Well, we have a lot of stock-specific action to track for you besides the markets. Well, and we'll get to that in just a bit in our top 10 segment.